BlackBerry surged 18.95% on May 23, closing at $7.91 in New York and $10.88 in Toronto. The week-over-week gain reached 28%. Most coverage framed this as a short squeeze triggered by the ad hoc FedRAMP recertification. That framing is too narrow. The FedRAMP certification was one of 4 simultaneous catalysts, and arguably the least significant structurally. The more material catalyst was QNX's appearance at the Robotics Summit and Expo in Boston on May 27 and 28. QNX has historically been understood as a real-time operating system embedded in over 275 million vehicles. It runs safety-critical software for all 10 of the top automakers and 24 of the top 25 EV manufacturers. That automotive identity is the reason most analysts anchor BlackBerry's valuation to automotive contract cycles. But the Robotics Summit appearance formally signaled a pivot. QNX's marketing head, Karsten Huraski, stated that robotics is at an inflection point. The company is presenting how QNX moves AI decisions into physical actions under strict time limits in autonomous mobile robots, humanoid systems, surgical robots, and medical imaging. 9 of the top 10 medical device companies are already QNX customers. The Nvidia IGX Thor integration, announced earlier this month, directly supports this expansion. Nvidia's IGX Thor is a platform for edge AI systems in regulated environments, industrial safety, medical devices, robotics. QNX is positioned as the safety-certified RTOS layer beneath Nvidia's edge AI. This is not an automotive story anymore. The automotive RTOS market is well understood and already priced by consensus. The regulated robotics and medical AI market is not. QNX's annual backlog growth of 23% since 2022 reflects design wins in segments analysts have not yet fully modeled. The unstated premise in analyst price targets of $5.74 is that QNX's addressable market is primarily automotive. If QNX's regulated environment mode extends into robotics and medical at scale, that premise fails, and the valuation floor shifts. BlackBerry's Q4 fiscal 2026 results delivered $156 million in total revenue, up 10% year-over-year. QNX alone contributed $78.7 million, a record quarter, up 20%. The QNX royalty backlog stands at approximately $950 million. CEO John Giamatteo stated that BlackBerry is no longer a company in transition. The company posted GAAP profitability for the 3rd consecutive quarter. Fiscal 2027 revenue guidance has been set between $584 million and $611 million, up from $549.1 million in fiscal 2026. A share buyback program was renewed on May 8th, allowing repurchase of up to 26.8 million shares, or 4.58% of the public float. These numbers raise a question that the current debate between squeeze and re-rating does not address directly. The royalty backlog structure is the key to reading the pipeline. QNX revenues are largely royalty-based, per-unit fees from design wins that flow through as vehicles, devices, or systems enter production. A $950 million backlog does not mean $950 million in near-term cash. It means $950 million in committed per-unit fees attached to design wins that have already been secured but not yet fully shipped. This structure is different from a subscription model or a one-time license sale. The revenue from a design win may take 2 to 4 years to fully recognize as the OEM ramps production. What the $950 million backlog actually signals is that QNX has already won placements whose revenue streams are still ahead. Annual backlog growth of 23% since 2022 means those forward streams are growing faster than current recognized revenue. This also explains the GAAP profitability turn. As earlier design wins moved into the production and royalty phase, revenue began flowing against a largely fixed cost base. 3 consecutive quarters of GAAP profitability is not an earnings management event. It reflects the royalty model beginning to harvest design wins secured in prior years. The risk is that this profitability is backloaded on automotive and has not yet incorporated robotics wins. If robotics design wins begin entering the backlog, the $950 million figure could expand significantly before analysts update their models. The current PE of 27 times forward earnings reflects partial pricing of that scenario. The consensus target of $5.74 reflects no pricing of it. That gap between 27x and the implied multiple at $5.74 is where the squeeze versus re-rating debate lives. BlackBerry now trades at C10.88 in Toronto. The analyst consensus target midpoint is C5.74. The stock sits 48% above that target. Simply Wall Street estimated fair value also places the stock roughly 30% above intrinsic value, at the C8.51 level that existed before the May 23 surge. At C10.88, the divergence is wider. The conventional interpretation is that this gap represents overshoot. Retail momentum and short covering have pushed the stock well beyond what fundamentals support. That interpretation requires a specific premise: that QNX's design win pipeline, backlog, and regulatory moat are fully captured in the C5.74 target. That premise is not stated in any of the analyst notes, it is assumed. The competing interpretation requires a different premise: that analyst models are backward-looking on QNX's addressable market, and that the robotics and medical AI expansion changes the structural earnings trajectory enough to justify a higher floor. That premise is also unstated. Both groups are simultaneously pricing their respective premises into the same stock. The short squeeze framing treats C10.88 as temporary and expects reversion towards C5.74. The structural buyer framing treats C5.74 as obsolete and expects the floor to shift upward as robotics design wins enter the backlog. The FedRAMP certification is important context here, but not because it directly changes QNX's revenue. Ad hoc's recertification to FedRAMP Class D High means BlackBerry's crisis communications platform serves 80% of U.S. federal agencies at the highest cloud security standard. This is a different product line from QNX. But FedRAMP High certification establishes regulatory credibility that transfers to QNX's positioning in safety-critical government procurement. When QNX competes for regulated environment contracts in robotics or medical AI, the presence of FedRAMP High in the broader BlackBerry portfolio signals compliance infrastructure maturity. That matters for procurement decisions in regulated markets, even when the specific certification is product-specific. The Nokia ADR rising 9.1% on the same day as BlackBerry's 18.95% surge is worth noting. Nokia operates in adjacent regulated infrastructure and communication software markets. Cross-peer price movement on the same day, without a shared direct catalyst, suggests capital rotating into regulated communication software as a category, not just into BlackBerry specifically. That category-level rotation is more consistent with structural re-rating than with single-stock short covering. The verification point for which premise holds is the Baird Conference fireside chat on June 2nd, where BlackBerry's CFO Tim Fote and QNX President John Wall are scheduled to speak. If QNX President Wall provides concrete numbers on robotics pipeline or new design win sectors in that setting, the re-rating premise gains direct evidence. If the conversation stays narrowly automotive, the squeeze interpretation strengthens. The C10.88 level is the reference point to watch against that event. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.